Hello traders and Market Club members worldwide. Adam Hewison here, coming to you from the digital studios of Market Club. Welcome. We're going to be looking at the markets. Last week was a very volatile week. As you know, we had a sharp down move for the early part of the weekend, sort of right towards the end, and then a strong rally on Friday. Was that a short covering rally? Was that just new buying or just bargain hunters? I think it's probably a combination. But the reality is the major trend in the indices is still negative. Look at all our trade triangles, all red, indicating that the trend is down. Now we may see a little bit further recovery here, but the reality is the major trend is down, and you should be playing that with caution. Let's go on to our next market. S&P, much the same picture there. You can see the kind of Japanese candlestick formations we see here. Really sort of a little bit of a reversal. The market was very oversold, and I think that's the bottom line. The market was oversold, but the trend continues to be negative with all of our red trade triangles pointing to lower levels. Now we could turn around here, possibly see a recovery, and let's just put our Fibonacci tool on. You just click on this little, looks like a shell, click there and pull it down, and you can see we've reached a 50. As you can see, we've reached a 50% retracement level. We may get a little higher up to maybe 1900, but that's definitely going to be a very important area. Potential reversal back down. So let's see how that plays out. But again, this is using the Fibonacci tool, which is right here. It's easy to use. The reason I clicked here is because the last low here, we saw a little bit of a pullback here. You could measure it also, go all the way up to the very top, and that would take the market to 1944 with a 61.8% retracement. Not sure that's going to happen, at least in the short term. Nasdaq, pretty much the same picture there. A couple of good days, a lot of pressure on the Nasdaq, and of course you had a big day on Thursday, and then Friday picked up again, but really not a lot of momentum on the upside here. A lot of stocks are still hurting. Certainly the trend's down. We've seen the daily turn up. Not such an important thing in the stock markets, but the weekly and the monthly are still negative, which is not a good sign. So we still think this market can go lower. This is the US dollar index. As you can see, basically all the trade triangles continue. I have to even go further out to show you. Here's the last weekly signal we had at 80.40. We're 85.09. So again, the trend continues up. We're right back down to a support line right here on the RSI indicator, which shows you right here. 50 tends to be the trend when things do change. You can see once we moved over the 50 line here, then the market kept moving up. So once it's over the 50 line, you have to consider the trend to be positive. When it gets back down to the 50 line, indicates that there should be some support there. You can see here, support was resistance when we got to that line, the 50 line, and pulled the market, and it finally went through. So it looks like the trend in the US dollar index continues to be positive. This is gold. The monthly is down, which we don't pay that much attention to. It is important, but the number one thing to look at here is the weekly. And the weekly is long from 1234, and you can see it right here. The market's 1244, so it's not a big deal, but it has moved up almost over $50 from the lows that we've seen here back in the October period. October 5th to be exact. So can it go higher? I think yes, I can. We're over the 50 line on the RSI. That looks like it's good. You've got both our weekly and daily trade triangles positive. Yes, I think the trend is up. I think it can go higher from where we are right now. This is crude oil. It has a lot of hurt in crude oil. You can see all of our trade triangles are negative, and it's the weekly and the daily you want to pay attention to. And again, we've done very, very well in this. We're going to show you the results of our World Cup portfolio, and you can see some of the profits we've made in this particular market. So again, the trend is down. How low it's going to go? There's people talking about in the 70-cent range. It could go that level. It could go 75. Who knows? But the trend clearly is negative at the moment. Now this is Apple. I wanted to show you Apple today for a couple of reasons. One, Apple reports after the bell its earnings. It also introduced Apple Pay today, which is the payment system they've developed, which I think could be very, very successful in the long run. But do I want to buy Apple? No, and I'll tell you the reason why. Our red trade triangle right here, 97.79. Now the market is higher, I understand that, but the reality is I want to see, I'd rather buy Apple at 103, 104 even, knowing that it's going higher. That's the key thing. Now they could have blockbuster earnings that come out tonight and it just blows through those levels tomorrow. I don't care. I just don't want to try to pick a turn right here in Apple. Now you can see the RSI will back up to 50, which is resistance. So we'll have to see how this plays out. The other thing to look at, if we put our Fibonacci tool in, again, I'm going to go to a candlestick chart from the top to the bottom, and we've just about had the 99.67, The high today was 99.68. It's a perfect Fibonacci retracement. So let's see if that holds, and we'll go from there. Now moving on to IBM. IBM was terrible. Their earnings were terrible. They've downgraded their earnings for 2015. You can see a huge drop in this market. Now the important thing I want to point out here with IBM is look at where we got short, both on the monthly and also on the weekly. We were out at 180. The last thing we had was to be out at 189.51. That's $20 ago. I think anybody in their right mind would love to have been out. Now the other thing is we scope this out even further, let's say to a couple of years, and you can see at this the market is at its lowest level. In fact, let's just max it out. It could potentially, let's take all the trade triangles off, potentially we could see IBM as an also-ran. Clearly they've got some serious problems right now. The market's telling you that, but you go from the highs here all the way down to the lows in December 2008, and you can see potentially you could see IBM at the 140 range, the 130 range would not be out of the question. So again, the trend is down. You can see, just put our trade triangles on, you can see clearly minus 100 indicating lower levels. Now we do have a positive stock for you today, and this gave us a signal. It's Lennar, L-E-N is the symbol right here, and they gave a buy signal today on the monthly charts at 42.67. 42.57 is the last trade, but again, if we scope this in closer, you can see a big, certainly a huge move from the 37.5 level up to 42.5 just in a matter of days. Now, again, if we see the market close over the all-time, not the all-time high, but the recent high of 42.67, we're 42.57 right now, I think that would be a very, very good sign. So hey, this is Adam Hewison. Keep your powder dry, trade carefully, and don't overcommit at these very volatile markets.